Eric is going to be talking about crash-proof strategy. Now, this is something you're not going to see very often. In fact, I think he's the only speaker out of all 24 that we have who's talking about binary options. I may be wrong, but I may be right. That's a song, isn't it?
It's a country song.
No, it's a Billy Joel song.
Oh,
right?
Okay, there you go.
I'm pretty sure I'm right. We'll have to find it. Okay. So before we turn it over to Eric, we're going to give away some prizes. So take the cake on how many times you've attended the party, right? So Eric, it's all you. I'm going to turn my video off, and you have 1 hour.
All right. Thank you so much. Thanks, Jeanette. As she mentioned, we have been, I think, good friends now since Vegas. You know, what happens in Vegas stays in Vegas, but that relationship is definitely carried over, and I appreciate her inviting me onto this, and I appreciate all of you guys for coming in and kind of hanging out with me during this quarantine stay-at-home time. And that's led to kind of a market crash situation that, you know, we've seen a pretty decent move off of high so far. And what I want to talk to you guys about today is crash proof, my #1 strategy that I've actually been using since 2011, and it still works. We actually just had a setup today, and we had a setup yesterday that was good for 100 points in the S&Ps. So before we kick it off with that, I do have to do a quick risk disclaimer here. The standard risk disclaimer of no representation being made. The use of this strategy or any system will generate profits. Past performance not necessarily indicative of future results. As you know, trading is risky. You are putting your money on the line in order to, you know, potentially make money, but you also can potentially lose money from that. CFTC Rule 4.41, hypothetical or simulated performance results have certain limitations. You guys know all of this stuff. So I just have to show it, and we'll dive right into it now. Now, rule #1 in trading for me is going to be this. And what I want you guys to do is write these down, because rule #1 in trading is knowing what your strategies are. Warren Buffett has a little bit of a different rule #1, and I'm sure everybody does. And we'll talk about him in a little bit as well, and a chance where I actually got to meet him and have lunch with him. But this is my rule #1 that I took away, because when it comes down to the markets, knowing what it is you're going to do or what it is you want to do, you have to know what that looks like first, and you have to define that. So for me, I define that by naming and putting a face, if you will, to the strategies that I like to use. Now, I've got targeting, divergence, level to level, containment, and breakaway. The strategy we're going to be talking about the most today here is the divergence strategy. That is my #1 profit strategy that works in both uptrending, downtrending, and sideways markets. And I'll show you guys some examples of that. Today's agenda is going to be this, though. #1 is why you are here. #2 is what are binary options, how they work, then why we use NADEX, what the costs associated for doing so are. #6 is huge, which is why traders fail. #7, my favorite trade setup, the divergence trade. And then #8 is what to do next. So while I'm going to be showing you guys this crash proof strategy, I also want to show you guys a way that you're able to use it with a little bit of a different product than what, you know, Jeanette alluded to, which is binary options. And before I really get into that, I do have a quick question, because there is kind of this, like, you know, one side of the aisle does this, one side of the aisle thinks this when it comes to binary options. So who out there has heard of binary options? And if you have heard of binary options, do you think they are legit, or do you think they are a scam based on what you've heard? And I really hope, like, most of the time there's a lot of people on the scam side of the aisle, which is cool for me, because we then get to kind of take you down this journey and show you that they're actually not. So kind of a spoiler alert on that one, but yeah. Don't know of them, scam, a legitimate scam. All right, little combination. Maybe heard. Okay, cool. All right, so we got more scams than legit, which is cool. So the introduction to who I am right here, you guys can see that is me, my wife Emily, and my son Jackson. I am a Full-time trader now since July of 2011. I was an electrical apprentice and then turned into a journeyman before that, working here in the DC metropolitan area, doing some stuff for the government and some other things like that. In 2014, I founded MLT, which is Major League Trading. And the reason being is just people saw what my wife and I were doing and traveling, which is one of the, number 4 travel addict there. And they were like, hey, can you show me what it is you do? And I was like, okay, let me see how I can do that. So that kind of led me on the journey to where I am now and, how I met Jeanette and how I am here speaking to you guys. So that's led me to mentor thousands of people from all over the world, get to travel. I think there's like 72 countries or 74 countries that we've been able to reach now through, the internet and MLT, and just a really, really cool thing. Also husband, father, speaker, all that fun stuff. So why you are here. Now, this is where you guys get to interact with me a little bit. And in your kind of trading journey, you're going to have these kind of 3 buckets, if you will. Beautiful family, your little man has a contagious smile. Appreciate that, Michael. So in your journey, you're going to have these kind of 3 buckets that you end up falling into, right? Number 1 is bucket beginner, right? That's bucket number 1. So this is where you guys get to interact and let me know. Just drop in a 1, 2, or 3 in the chat based on where you're at. I like to get a kind of feel for what the audience looks like today. So bucket number 1, the beginner. This is someone that maybe you're on demo still, or you've dabbled just a little bit with real money, and you're kind of like trying to figure out your strategies, get the right vibe going, and really go down the right path, which is why you're probably here today if you're in that bucket, which is a really, really good thing. Bucket number 2 is the intermediate. You're trading most likely real money. You've had some wins, you've had some losses, but overall your P&L is basically just kind of flat. You really can't quite get that next hump. You keep making a couple little mistakes that if you could just cut out a few of those trades, and tell me if this sounds familiar, if you could cut out just a few of those trades that ended up taking away your P&L that you made, you'd actually end up being a profitable trader. And we'll talk about that, why traders fail, a little bit later on. And then bucket number 3 is the veteran. You're making money in the markets and you're either doing it consistently as a side income or you're doing it full time, like I do now. Futures suck, other stuff is okay. Hey, I appreciate the honesty. Look, when you're a trader, like, you can only be honest with yourself, right? You don't have anyone else sitting there. Like, all 3 of these pictures are me sitting by myself. Now, someone took the pictures, obviously, but when I'm trading, like, I don't have anyone else to hold me accountable. So, like, whoever just said that, Mary, that's really, really, really awesome. I really appreciate that. Guilty of that, trying to chase trades. All right, cool. So a bunch of 1s, some 2s, a couple 2 and a 3s, a 2.5. Perfect. That's a good mix there. All right, so I got something for all of you guys. What are binary options? Well, in my opinion, they are the best product for you to trade. And the reason being is that it's the simplicity of options. And what I mean by that is it breaks trading down to just a yes or no decision. And you can see there's this little yes or no kind of thing there, right? Is, will the market be above or below this level by the end of the day or by the end of the expiration? And I'll show you guys an example of that. It also allows for a starting capital of only $250. This is for those people that are in bucket number 1, right? You want to get in the markets, you want to start demoing, you want to start dipping your feet in a little bit small, like Warren Buffett says, don't jump in with both feet at the same time. Just test the waters with 1 foot. Starting capital of only $250. No PDT rule. This one's huge, right? When I first started trading, it was like, my first trade actually was a loser. I bought Exxon, XOM. The next day it was down $2. And I was so new that I actually didn't even know that I lost money essentially from the entry on paying commissions. So I literally knew nothing when I started. I'm like, hey, I'm going to figure this thing out on my own. Then I learned, after I had to pay commissions, I learned that there was a PDT rule, which if you don't have $25,000 in your account, you're unable to day trade more than 3 times in a 5-day period on stocks. Well, with binary options, there is no PDT rule. It also gives you the advantage of having timed exits. So you can allow the market to kind of gyrate itself around range itself out, trend itself higher, lower, whatever, and you already know when your predetermined time to get out of that market is. It also gives you multiple markets available. Everything from stock indices to commodities to Forex pairs. And lately, I've actually been playing the unemployment numbers that have been coming out at 8:30 in the morning. And I've hit those every single time for the past 3 weeks, which has been kind of fun. Next up is virtually a 24-hour market. You know, it used to be back in the day, like markets were only open from 9:30 to 4 o'clock. Now with, you know, the global economy and the world and everything, we're on basically a 24-hour market now. So even if you have a job, maybe you're not at your job right now because of quarantine or whatever the case is, but even if you do have a job and you can't be at the desk from 9:30 to 4, that's fine. There's opportunities outside of those normal hours that we, you know, kind of are used to thinking about with the markets. And this last one here, which is CFTC regulated. This is where everyone that said scam is wrong. Now, it may just be the fact that you don't know, and that's what we're here to show you guys. So when it comes down to what are binary options are limited risk contracts based on a simple yes or no market proposition. Will the markets go up by the end of the trading day, or will they go down? Like I mentioned, it gives traders a way to trade the most active stock indices. That would be like the S&Ps, the NASDAQ, or you could compare that to if you're looking at the SPY or the QQQs. It also gives you the opportunity to trade commodities. So if you like to trade gold, you like to trade crude, it gives you the opportunity for those. And there's also 10 different Forex markets available, and all of this using relatively low collateral. Again, we're starting with a minimum balance of $250. The contracts are cash settled. So when your expiration hits, let's say you expire and you are awarded $100 for that contract, that money is instantly in your account, cash settled right then and there. And one other thing that NADEX allows you to do that these other binary options brokers don't do, which I will talk about those in a minute, you can close your contract prior to expiration, either to take profits or cut your losses. So it's not, when you think of binary, it's just, you know, yes or no, you put the position on, it either works or it doesn't. In this case, we're actually able to use technical analysis and our strategies and go, okay, if price breaks below here, I want to go ahead and get out of this position, cut my losses, and reevaluate and wait for the next setup. So on the right side here, you can see we've got an order ticket up there, and that's for the US 500, which would be the S&P 500s, for a move over 31.1650 by 10 a.m. This was back November 25th of 2019 here in this example. And basically, if you're looking for the market to be above that level, you would be a buyer of this contract. If you're looking for the market to move lower, then you would be a seller of this contract. A simple yes or no decision is all you have to make. Now, why binary options are better? And the traditional trader has to worry about all of these things and more. Now, I worry about all of these things because I do trade regular options. I do trade futures as well. The three main products that I trade are stocks and stock options, futures, and NADEX. But when I'm trading those products, I have to be aware of earnings, news events, delta, theta, gamma, whether I'm buying puts, buying calls, I'm selling a put credit spread, I'm buying a call debit spread, whatever the case is, there's all of these different factors that I have to, you know, consider and I have to be aware of. To whereas with NADEX, I can make a decision of yes, it'll be above this level, or no, it won't be above this level by the given expiration time. And that's why I think it's the perfect product for price action traders, because price at the end of the day is ultimately king. We're trading, looking at a chart, we're trading based on what price is doing. If price didn't matter, then why do we care if the S&Ps are at 2,800 or if they're at 2,200? Well, because we have positions on and we get rewarded based on where current price is. So price is all we really need to be concerned about. So as a CFTC registered exchange and clearinghouse, NADEX adheres to regulations including matching buyers and sellers and not participating in trades. And this is where I'm going to give the kind of those scam brokers a little bit of a spotlight for a second. Those scam brokers, they're coming out of places like Cyprus and overseas somewhere, and you can't get a person on the phone. It's not like NADEX being based out of Chicago. I've been to their offices. It's not like TD Ameritrade where you have a TD Bank. You're seeing this in the US. You're seeing reputable brands, and they're all regulated and have some type of, you know, government body that says, hey, you can't do this. Hey, you can't do that. These ones that are the scam brokers coming out of Cyprus, they're taking the other side of your trades. And if you win, they're just not giving you your money, right? It's literally, they operate a casino that they can't lose at, is basically what it ends up coming down to. And with NADEX, they're holding all your member funds in segregated accounts in top tier US banks like Fifth Third Bank and BMO Harris. NADEX, since they're not taking the other side of your trade, their income is solely derived from exchange fees, and that would be the commissions that you're going to pay in order to trade on their market. This is going to be the difference between an exchange and a broker. Again, a couple of my favorite benefits when it comes down to trading NADEX. Number one is limited risk. The maximum amount you can lose on every trade is your original investment. It's not like, you know, if you were short BYND today for some reason because you thought fake meat and it was going to go lower and it had earnings and it's, you know, up 20 some dollars on the day already, you can potentially lose more than your initial investment in that, right? If you're short a stock and it goes higher, I hope nobody was short Tesla on that move up to like 900 plus, right? Because you potentially lost a lot more than what you had in your account. If you were selling calls, whatever the case is, not a good situation, right? For a newer trader, those people that are in bucket number one and bucket number two, those holds where you're just kind of like, I don't think it's going to go that much higher. I'll just give it a little bit more room and a little bit more room. And then it continues to go higher. And those trades that you could have just cut off that would really impact that bottom line, this helps you eliminate that because the maximum amount you can lose on every trade is your original investment. Now, low collateral required, perfect for everybody in bucket number one. Binary contracts are priced between $0 and $100. So let's say the S&Ps are trading right now at 28.5650s, which is what they are trading at. And let's say there's a strike price right there. If we decide to step in and buy that particular contract right now and we say, yes, it's going to close above this level. If it closes above that level, we're awarded $100 for that contract. If it closes below our level, we know that the lowest that contract can go to is $0. So our risk is defined on both the upside and the downside, and there's low collateral required to get into that trade. We also have the option to short-term contracts with binaries that have expirations ranging from 5 minutes to 1 week. So you could step in 5 minutes from now and say, hey, this specific underlying is going to be above or below this level in the next 5 minutes. If you're right, it's a max payout of 100. If you're wrong, you lose whatever it is you paid for that because it can only go to 0. But again, this is where I talked about where it gives you the timed exit. You don't have to determine when you want to get out based on price, right? If you've traded traditional options before and you get into, Apple at $100 and it goes to 105 and then pulls back to 102 and then goes back to 105, your option contract is worth less than it was the first time it went to 105, right? That's just part of how options work with theta decay. With this, you don't have to think about that. You just need it above $100. And my favorite part about binary options is when you enter into the contract what your profit or loss will be based on where the price is. Again, because they're from 0 to 100. All right, so NADEX commission and cost structure, again, limited risk, low collateral, short-term contracts. To get into a position is just $1 per contracts. To get out is just $1 per contract. So if you're getting in or out, it's $1, right? If the trade expires in the money, meaning that it is above where you said it was going to be, or it's below where you said it was going to be, it's just $1. If it expires out of the money, meaning that you were wrong and you held it all the way to expiration, there is no settlement fee for that one. Can I get out if I'm in the wrong direction? Absolutely. That's one of the benefits of NADEX compared to these other scam brokers, outside of them being scams and NADEX not being scams. All right, so why traders fail? First reason here is they're trading the wrong product. And again, like I said, if you're trading traditional options, which I do trade those, but if you're in bucket number one, it's probably not where you should start off at, right? Number two, unknown max risk upon entry creates this emotional hope, right? I'm going to raise my hand right now because I'm guilty of this. I've done it. Where you see an options contract or you see a stock and you're like a penny stock or this kind of allure of like, hey, I can put $1,000 into this and it's going to go from 2 cents all the way up to, you know, $10 or $20 or whatever. And it just kind of gets this hope and you just hold on to this position and you just get infatuated with that trade and you miss out on all these other opportunities that come by you because you have this hope. So whereas with this, you just need a simple yes or no decision to be made for yourself. Longest time for binary options is out to the end of the week. All right, number three, no defined trading setups. Rule number one, right? You're gonna go on a date with somebody, right? You got to know what their name is. You got to know what they look like, right? You don't just walk up to some random person and ask them, you know, to marry you, right? You go on a date, you get to know them, you learn their face, you learn all these other things about them. And then you have it, right? Sorry, that ding distracted me for a second. So you got to know what they look like, all of these things, right? So rule number one is defining it so you know how to spot that person in a crowd, how to spot your trade setup in the markets when it occurs. Number four is analysis by paralysis. My charts are completely clean. I'm going to show you guys my charts here in just a minute. I use nothing on my charts. I have no indicators except for one that I built. I have no Bollinger Bands. I have no Keltner channels. I have no RSI, no MACD, none of these things, right? Too many traders get this kind of shiny ball object syndrome and they start putting all these things on their charts. And I used to do it. I can pull up some old screenshots from like 2010 and it was rough. It was rough. You can't even see what price is doing, right? Price is king. Remember that. Number five is reacting to price rather than having a plan of where to trade in advance. I saw someone say this earlier that, you know, they're guilty of chasing trades just based purely on FOMO. You see something that's moving and you go, hey, I want to jump in this because I think it's going to go here. And guess what? You just bought the top. Instead of buying low, selling high, you end up buying high, selling low because you're reacting to price rather than having a plan of what you want to do in advance. And the way that you have a plan is by going back to rule number one and defining those trade setups so you know exactly what you're looking for when you come into the markets each and every day. And then again, addicted to chasing both up and down moves, trying to catch those, you know, quick like 10-cent moves if you're trying to scalp it, and just literally trying to generate some type of profit because you see something moving instead of having that patience and discipline in order to follow those setups from rule number one. Now, again, I mentioned that I have a little bit different rule number one than Warren Buffett here. So this is a really cool experience for me. I was actually able to fly out to, for those of you, if you don't know who Warren Buffett is, please type that in the chat. Just say no, you have no idea who this old guy is sitting next to me. I would hope, and I would assume that most everybody in the room does know who he is. But yeah, this is a young Eric Marcus with Mr. Warren Buffett there. Again, I had the fortunate opportunity to fly out. I got to tour a couple of his businesses in Omaha, Nebraska, the Borsham's Jewelry Store, Nebraska Furniture Mart. He gave a presentation at his building there in Omaha. And then I rode with him to lunch in his Cadillac. He drove. Scary situation. Don't advise that. But nonetheless, we survived. It was a cool experience overall. Jimmy Buffett's brother. That's pretty good. All right. So a couple of wise words here from Warren. Should you find yourself in a chronically leaking boat, energy devoted to changing vessels is likely to be more productive than energy devoted to patching leaks. How does that relate to trading? Well, number one, if you're trading the wrong product, as opposed to trying to make that product fit to what you want it to do, most likely changing vessels, changing to a different product. If the strategy you're using doesn't actually work, then change strategies, right? Quit trying to make that strategy work. If it's not working for you, energy devoted to changing vessels is likely to be more productive than devoted to patching leaks. Number two, this one really goes kind of hand in hand. One's talking about sea, one's talking about land. The most important thing to do if you find yourself in a hole is to stop digging. This happens more frequently than anyone will ever want to admit, is when you are down on the day. I'm gonna raise my hand again because I'm guilty of this one. I have done it in the past. I don't do it anymore. When you're down on the day, you're down $1,000, you're down $2,000, whatever the number is, but you start pressing trades because you don't want to end the day down. Look, you're going to have losers. It's just the way it is. But again, if you're digging yourself in a hole, the most important thing to do is to stop digging. Number three, you can't produce a baby in 1 month by getting 9 women pregnant. I only have one child. But the way that I kind of relate this one to trading is just quality over quantity, right? That's something that I preach each and every day inside my trade room, and to the members that follow me, is one good quality trade setup per day is really all you need. One good quality trade setup per week is really all you need. So instead of trying to put, a little bit here, a little bit there, a little bit here, a little bit there, when it comes down to intraday and short-term swing trading, you can't produce a baby in 1 month by getting 9 women pregnant. You're using that one. You're welcome. All right. The 5 best setups to trade NADEX. I mentioned these earlier. You guys should have all wrote these down. Number 1 is targeting. This is great for trending markets. It has worked really, really, really well over the past few weeks. Since we hit lows, it worked really, really well on the way down, and it's worked really, really well on the way back up. Number 2, divergence. This is the one I'm going to be talking about today with you guys and showing you guys exactly how to use it. And literally you can pull up your charts and start using this tomorrow. Level to level, this is how to identify support and resistance before they trade. This is where I'm planning my trades before the market reaches my levels. So I'm not just, reacting to price. I'm actually letting price come to me and then it telling me what I should or shouldn't do from that level. Containment. A lot of people get chopped up in range-bound markets. We have a range-bound market today. I called this inside day to a T inside my morning write-up today. But there's a way to take advantage of this with binary options, because you can sell above, buy below, and just let price consolidate in the middle, as opposed to trying to, catch the breakout or the breakdown, which would have gotten you totally screwed today. Just allow price to be contained inside that range. Number 5 is breakaway. This is where people bet on news announcements. And I use the word bet in the sense that, you're buying something into earnings and you have no idea. Earnings could be good, they could be bad. The stock can still do whatever. But in this case, we use both strikes, similar to kind of like a strangle or a straddle, if you will, of traditional options. And we allow those news announcements to work for us. Yeah, exactly. Like oil today. Perfect. All right, so the divergence trade. This is where I'm going to show you guys the setup. If you got a smartphone, hopefully you got a smartphone, take some screenshots, take some pictures, whatever. And these are literally, this is the whole entire strategy right here. You're going to identify the potential highs and lows of the day. After the market opens, you want to wait for the first 15 minutes of the trading day. After that happens, you want to mark the highs and lows of each index. So we're talking about the S&Ps, the NASDAQ, the Russell, and the Dow. Those are the 4 main US indices. We're going to wait for one market to break the high or low and the others to not. That's going to make more sense in a second. We want to wait for the trigger. And then the way that you can play this with binary options is choosing the closest strike to that given price. Is this divergence strategy an option strategy? Yeah, you can use it with, again, the strategy I'm going to show you guys works with stocks, options, futures, NADEX. I'm gearing it towards NADEX here, and I'll show you guys why. All right, so here's the four grid. This is S&Ps in the top left, NASDAQ in the top right, Russell in the bottom left, and the Dow in the bottom right here. So in this example, we're looking for a moment in time. Again, we're letting the first 15 minutes or so of the day trade, and then we're looking for a moment in the time where one of the markets breaks through the high or low of the day and the other markets are not. Now, the reason we want to do this, and I kind of explained a little bit more about this yesterday in the trade room because someone had a question, is all kind of ships rise with the tide type of thinking, right? If NASDAQ's going higher, S&P is going higher, then the Russell and the Dow should kind of go higher. If one of them kind of like breaks down and does something else for a quick moment and then starts to reverse, it's like, oh, hey, I don't want to actually go lower. I want to go higher. I want to follow, you know, all my other friends type of thing. So we actually have a pretty clear example of that right here. We're 5, 10, 15, 20, 25, 30 minutes into the day here in the Russell. I'm in the bottom left here where you can see my pointer there. Take a look at that. The Russell breaks through the low of the day. At that same moment in time, where's the S&Ps? Not breaking through lows of the day. Where's the NASDAQ? Not breaking through lows of the day. Where's the Dow? Not breaking through lows of the day. So this tells us, hey, this is potentially a low, or we can get a nice retracement from this in the Russell based on the fact that it had this little divergence set up right here. So waiting for the first 15 minutes a day, waiting for one market to break the higher low and the other markets to not, and then looking to trade that in the opposite direction. All right, another example here. This is where you guys get to, I've shown you one example. Let's see if you guys can spot the next example here. Now, so go ahead and just punch in the chat. Let me know if you guys can see this trade setup. NASDAQ actually breaking out new highs right now on the day. But the reason that this strategy works so well with NADEX is because you're looking at price being above or below a certain strike by the given expiration time. So if you can pinpoint the high or low of the day, then how well does that work with above or below? Old data. Well, I got live charts I'll show you in just a second from a trade yesterday, but yeah. So the example right here from 2019, December, just 4 months ago, is right here. We break down at 11:15 on the day. S&Ps breaks down, new lows. Russell breaks down, new lows. Dow breaks down, new lows. Guess what? NASDAQ doesn't get new lows on the day. So we're comparing all four indices to each other. And if the market's going to go higher or the market's going to go lower, we want to see all of those going together in tandem. When they don't do that, that gives us this price divergence that we're looking at right here. NASDAQ says, hey, no, I don't want to go lower. Why don't you guys come follow me and we'll rally back up here? It's exactly what happens. NASDAQ doesn't get new lows on the day. Dow reverses, Russell reverses, S&Ps reverse. If we go, okay, yeah, we're going to be above 3165 by the end of the day, we rally up and we go sideways. We don't need it to go all the way to new highs. We just need it to stay above that specific level that we get in at. All right, here's another example. This one actually, there's kind of two of these in here. They're really kind of niche, if you will, to spot here. So these two, a little bit more aggressive right after the first 15 minutes though. Take a look at the Russell here. Russell gets this topping tail 20 minutes into the day, pops up, gets new highs on the day. 20 minutes into the trading day, S&Ps, no new highs. NASDAQ, no new highs. Dow, no new highs. What do? We end up rolling over. Russell makes new lows. S&P's new lows. NASDAQ new lows. Dow new lows. And this bar is even better because the Russell couldn't get a close above this prior high. As a little kind of ninja hack to the trade, right? Russell just gets a nice topping tail right there and immediately reverses, flushes down about 10 points in the Russell. That's a nice move. 10 points in the Russell, $500 per contract. Or if you're trading the IWM. Does it happen every day? Almost every day. Yeah, 3 to 4 times a week. All right. There's also another one here on this chart. I keep losing my mouse. There we go. Russell here later on in the day, about 2:45, we break down, we get new lows on the day here in the Russell. You can see we barely crack through those lows, right? Boom, 2:45. Now, I'm typically not at the desk at 2:45, or if I am at the desk, I'm doing other things like writing content or answering emails, creating videos, things like that. But my typical trading day is done by about 10:30 to 11 o'clock each day, unless I have a position on that I'm just managing and holding, throughout the day. It's still running. We're just trailing it. We got a nice trending day going, something like that. But for the most part, I'm done, including this strategy, capturing the move that I would like to see within that first hour to hour and a half of the day. So for those of you that are on the West Coast, this works out really, really well because, if you have a job, you got to leave for your job, but markets over there are opening up at 6:30 in the morning. So you have time to be done potentially by 8 o'clock each day, West Coast time, and still get to your 9 to 5 job if you so choose. Again, Russell, new lows here, market bottoms, rallies from there. What broker can you use to trade this? You can use NADEX. You can also trade it with traditional stocks, options, or futures. All right, so choosing a strike for the divergence trade, and then I'll actually kind of make this strategy a little bit sweeter for you guys. So choosing the strike, you want to choose the closest strike to at the money. If the S&Ps are trading at 2,800, you want to choose the closest strike to that price, whether it's 2,801, 2,802, whatever the case is. You want to be right in and around as close to that price as you can be. We're going to choose the 4:15 p.m. expiration time. Again, we want to allow this market to go ahead and work, and we're potentially pinpointing and grabbing the lows and the highs of the day, so we can just put our position on. We know what our risk is, it's defined, and we can let it work. We can use an hourly strike only if there's 45 minutes left to expiration. So if you guys want to get out of this a little bit sooner, yeah, all these times are Eastern. If you want to get out of the trade a little bit sooner and you think we're into a good support level, we have a divergence, and you go, okay, we're going to bounce from here, and there's a strike that has 45 minutes left to expiration, go ahead, choose that strike, and then go on from there, allow it to expire or cut the loss, etc. Again, close the trade if new lows are made, or in the opposite side, if new highs are made if you're looking to short something. So that's, again, one of the benefits of NADEX is you can get out before the contract expires. All right. Now, like I said, I'm going to make this a little bit better here for you guys. And here's another example. Again, this is from 2019, just a couple months ago. And what we're looking at here is there we go. We've got a new low on the day right here at about 10:15 in the Russell. 10:15 in the Russell, new lows. 10:15 in the Dow, new lows. Guess what? NASDAQ, no new lows. It's actually a higher low. Higher low. S&Ps, no new lows at 10:15. It's a higher low, right? We end up pushing above those prior lows. Russell and Dow come down. This is a 2v2 situation. We've got the Russell and the Dow pushing to new lows on the day. The S&Ps and the NASDAQ are not. They're saying, hey, we want to go back higher. And guess what? Market ends up bottoming, and we rally from there. Again, it's really, really simple. I took it one step further, and I said, okay, how can I visually put this on a chart when the setup occurs and just have it give me a red or green arrow when it actually happens, so that I don't necessarily have to be looking at the charts consistently. I can set an alert, I can get a little ding, and I can, answer emails, I can do whatever I want. And if it sets up later, like 11:15, 11:30, it'll let me know. So I worked with a Russian programmer, and we developed the MLT divergence indicator. And what this does is it measures all of these things for you. It looks at the highs, it looks at the lows, it waits for one market to break the highs or the lows, and gives us a simple red or green arrow. So you can see, here's that example where the Dow comes down, breaks to new lows, doesn't get new lows in the NASDAQ, doesn't get new lows in the S&Ps, and the Dow says, hey, we want to go higher from here. Boom, right? There's another example in this chart too, where the S&Ps at like 230 break to new highs on the day, right? The Russell's not breaking to new highs at 230 on the day. The NASDAQ doesn't break to new highs at 230 on the day. The Dow actually doesn't break to new highs on the day either, because there's this little topping tail right back in there at the open that we don't pop through. So S&Ps give us a little signal here, says, hey, nope, we don't want to go higher. Boom, lower we go. So we've nailed both the high and low on the day using this strategy combined with the indicator. All right. And actually, before we get into this, I want to show you guys the setup from yesterday here. So I'm going to pull up a live chart, and then I'll go through the other strategies for you guys. So here's live charts right now, same 4 grid that you guys have seen. We're going to scroll on back here to, I guess today is Wednesday. What is today? Scroll on back to Monday. Scroll on back to Monday. And boom. Scroll on back to Monday. So I use this 4 grid here. And this just gives me a really good visual representation of kind of what the overall markets are doing. So this is what I like to watch throughout the day. This gives me kind of my sentiment here. And if we look, I'll zoom back just a little bit right here. I had a level on the S&Ps here, 2788.75s. This comes from the level to level strategy. And I combine the divergence with that. But take a look here, and this might make it a little easier because we got the cursor that goes all the way across. Notice here on this bar, 9:40 in the morning here, right? Now, this is within that first 15 kind of minute window, right? But notice we end up getting a divergence here. The S&Ps and the Dow break down to new lows on the day. NASDAQ, 940 bar, no new lows. Russell, no new lows. What do we end up doing from there? We end up rallying. And S&Ps rally all the way up to 89.25, which was a level that I gave out as the swing from that move. So a 100.5 point move in the S&P futures. That is good for $5,000 per contract in the S&P futures on that move, right? So there's a quick little example of just compared to Monday, market making that new low in the S&Ps and not making it in another market. There's another one here on the day here in the NASDAQ, 1050 today. NASDAQ pops up, gets new highs on the day, pulls back. Why? Dow, no new highs. Russell, no new highs. S&Ps, no new highs. We've been range bound ever since there. And we can actually take it like one little tiny step further on this, but we don't, we don't quite have time for that. But I'll show you guys a little ninja trick for that at another time. How often do divergences work compared to fails? Have you ever calculated a winners versus loser rate? I did, Scott, actually back in, I want to say it was 2013 or 2014. I built kind of like a little trading tracker thing for it. And I tracked with very specific rules of closing it at the end of the day, just using the SPY. So just shares of SPY and kind of sizing it up based on the stop for that 1 bar risk. And it ended up doing in the first 2 months, I think it was 2013 or 2014, it did 93 units of risk. So if you risked $100 per trade only in the SPY, by the end of those 2 months with $100 risk, it was good for $9,300. And again, that was in part of like the tracking phase of it and getting it all coded up and working with that stuff. So yeah. Again, the reason that it works so well is the risk reward is great. You have a 1 bar risk, a 1 5-minute bar risk compared to, looking at a daily chart and going, hey, I want to risk 10 points on the S&Ps. With this, you're risking 3 to 4 points on the S&Ps and looking to get that higher probability move based on that. Does it work for swing trading? Yes. There was a high in the NASDAQ on the chart at the current time. Yeah, we're making new highs on the NASDAQ right now. None of the other markets are, though. All right. So I want a couple more minutes. I want to cover these other 4 strategies with you guys. And I designed these to be a little bit more kind of set it and forget it. The divergence strategy that I showed you guys, which I've been using, again, like I said, since 2011, that strategy is more for kind of intraday. First, 60 to 90 minutes is what I like to look for with it. But these are strategies that I put together working with members of the MLT community, the MLT team, and going, hey, what is it that you guys want? And what they wanted was trades that they could put on in the morning or at night. So I did that. I worked with our members here. And in August, I started sending out some trades based on criteria that I put together, going, hey, if this is this, we do this. If this is this, we do this type of thing. And there's really a fine distinction in this that I want to show you guys. These are the results. I sent these trades out for 2 months, had members follow along, and they were like, yeah, this is perfect. We're understanding the strategies. We're doing this, we're doing that, and it's working out really, really well. So with this, again, I sent this out in the morning for about 8 to 8:30 each morning. I would sit down, I would do my analysis, and I would go, okay, what are the trades? Let's put the trades on. We'll place our orders. If they fill, they fill. If they don't, they don't. So you'll see we have a couple of didn't fills in here. Didn't fill, didn't fill, didn't fill. This is the one distinction that I want to make for you guys. When it comes down to your trading is having consistent sizing, right? Because if we took just one contract on all of these trades, we started this August 12th. If we took just one contract, the end result at the end of the month, trading just one contract, is $235. Now, one contract, your risk is about $50 bucks per contract risk. You can see there's a couple trades in here, $39, $18. So we didn't even hit that $50 max risk on the trades, right? We were able to kind of keep that inside that wheelhouse there. When we take that and we go, let's take it one step further and let's go with a maximum risk of $50 to $60 per trade. So maybe we're putting on 2 contracts. Maybe we're putting on 4 contracts, right? This is going to be a contract size here in this column. When we start putting that on, it does a lot of different things to our numbers. It more than doubles them. It takes them from $235 up to $501.75. And our biggest loser in the previous column, just using one contract at $39.25, our biggest loser ends up only being $55.50, right? So we took a $4.75 loss, we turned it into a $47.50 loss. But again, we're using consistent risk metrics on this, and it really makes a difference at the end of the day. $501.75 compared to $235. So again, another reason why traders fail is they're not using consistent risk metrics. That's why you're making $100 on one trade and losing $200 on another one, because you're not sizing properly. Another example here, September, the next month, $96.25 if you're only trading one contract using the other 4 strategies. These are only the other 4 strategies, not the divergence strategy itself. When you take and max contract size that to $50 to $60 risk per trade, ends up being $286.25, almost 3 times your reward just by putting on that extra little bit of risk there. All right, and then we got a couple more minutes, so I want to kind of fast forward here. In 2020, so I worked with the members in August and September 2020. We started sending those trades out, getting some feedback from there. And then what I did is I took the rest of the year in 2019 and I built a course around those strategies, defining specifically those trades that I was taking in that first 30 minutes, 8 o'clock to 8:30 each morning, Eastern time, putting the positions on, letting them either fill or not fill, and walking away from those on the day. January of 2020, before all of the world went crazy, my wife and I, we like to travel. Like I said, we took some time off, and I allowed the students to start working and going through the course and giving me feedback from that and how it is that they're doing. And Scott sent me this message. He said, the first 3 to 4 trades that I did using some of the analysis that Eric goes over with it and some of the strategies, I've already more than paid for the course. If any of you out there are looking at doing this course, I highly recommend it. Scott is still inside the MLT Discord channel. He's still talking with us each and every day. And again, his first 3 to 4 trades more than paid for the course. I actually had another member just yesterday. I'll put up the screenshot later on my Instagram story. He ended up making $12,000 yesterday using the strategies that I taught inside the course on NADEX. He sent me that message at like, I was up till 3:30 last night, but he sent me that message at like 1:50 in the morning, which is really, really cool to see. So the strategies are working for people. They're really, really easy to understand, like the divergence trade. And so what I did, like I said, I put all of that stuff together and I created the MLT NADEX Trader Program. And inside this program is where I'm going to show you guys my best setups to trade NADEX, the targeting, the divergence. I'm going to go a little bit more in depth with that than what we were able to today. We only had an hour of time. We're also going to talk about level to level, containment, and breakaway, how you guys can use all of these strategies in your NADEX trading. That's a $497 value for the NADEX Trader course. I also put together a couple of MLT proprietary indicators, some do not trade zone indicators, and some NADEX strike indicators. It's not only as important as when you are trading, but more so when you're not trading. So I put together an indicator that allows you to know when not to trade, which is super, super important. If you can, again, like I said, if you can eliminate some of those bad trades because you shouldn't have been in them in the first place, it really, really makes a difference on the bottom line. Number 3 is a custom trade grid charts with tutorial. I'm going to share with you guys my 4 grid, my 8 grid, my 5 grid, all of those things there. That's an easy $299 value. You also get lifetime access to the chat room. This is easy $497 value. A number of other people charge monthly and do all these other things with their chat rooms. For me, it's just about building the community and building the team. And for that, we give you lifetime access to that chat room. And then also, as I'm placing new trades on NADEX, good or bad, I show you my bad trades too. I do a trade review video on those, and I upload those inside of the course for members to see as well. And that's an easy $897 value for a grand total of $2,585 total value on this course. But I'm going to add in something else. I'm going to add in that MLT divergence indicator there, available for Thinkorswim. That's an easy $997 value. Again, this has been my crash-proof strategy that I've used in bull markets, bear markets, sideways markets since 2011. It is almost like, it's almost like not even, you can't even put a number to the value on that, but I did put a $997 value on that. And brings the grand total up to $3,582. But because you're here today, because Jeanette is a good friend and she brought you guys here and you guys have spent your time with me, and I really appreciate that. For today only, it is going to be just $297 at mltnadex.com. You're going to get access to all of the strategies that I showed you guys, or all of the strategies here on the left. The divergent strategy, more ninja hacks to that, the indicators, the custom grids, access to the chat room, access to the trade review videos. And again, like I said, that divergence indicator on top of it. So even if you're just picking out, like just you want access to the chat room, even if you just want it for that, it's worth the value. If you want it just to learn more about the level to level strategy or the containment strategy, it's worth it for that. So any little piece of this that you want and you take it apart, it's worth more than that $297 value that you guys would have to pay today in order to join mltnadex.com. What was that alert? Oh, cool. All right. And last but not least here is, how do you get started once you've joined at mltnadex.com? You're going to get a link to log into the trading chat room. That is the Discord where myself and Jay and Rob, which is actually the guy that taught me a lot of the things that I use today. we're all inside that chat room. So you get access to him, which he streams live trading stocks. You get access to Jay, which is our Forex expert. He's trading live, showing you guys the stuff he's watching on Forex. You also get access to me and talking with the rest of the team inside of that chat room. That's number one. Number two is installing the rest of the MLT indicators that you guys are going to get, in addition to that divergence indicator, which if you can copy and paste, then it's as simple as that. We made it super, super simple. We send you a link, you copy it, you paste it, and you're good to go. Number three is just learning the 5 setups that I use to trade NADEX and start applying those on a NADEX demo account that you're going to set up, and then just practice, practice, practice. So you'll learn a simplified way to get all the answers and access to me inside the chat room by joining this course at mltnadex.com. I think I have just like 3 minutes, maybe. I'm not quite sure. But if you guys have any questions, feel free to go ahead and drop that in. It is $297 one time, lifetime access to the course and lifetime access to the trade room. I have a Thinkorswim account. Can I get approved to do this strategy? Yeah, you just need a charting platform to pull up the 4-grid. Is there help for newbies to get started or for those who have previous experience? Yeah, like, so not only do I have myself and Jay and Rob, like I mentioned, inside the chat room, I've also got a coach in there that answers questions too. And then we have other moderators, if you will, that will answer your questions in addition to that. So we have other successful traders in there, people that have either earned funded accounts, trading their own money, have no other job. Their trading is their full-time gig, in there answering questions and stuff like that as well. Yeah, so binary options, you're trading based on, so if you're watching like the S&Ps, that would be the underlying for the options contract in NADEX. Does it work on MT4? You can chart an MT4, but you will have to execute with NADEX. No, you don't have to get approved for Forex. You would have to get approved. You would have to open a NADEX account. Can you do this with a Fidelity account? So no, so NADEX is the exchange. You're going to route your orders on NADEX. You're just going to use Fidelity, or I don't even know what their charting platform looks like. You're going to use Thinkorswim, MT4, all these things just for your charting and your analysis, and the actual execution will be on NADEX. Yeah, does the divergence trade work just as well in ETFs, SPY, Qs? Yeah. It's all the same. If you pull up, I have an 8-grid. Here, hold on. Let me see if I can pull that up. So yeah, I use an 8-grid as well that looks like this. And I have the SPY, the QQQs, the IWM, and the DIA down here. The monitor I'm showing you guys right now is like a 24-inch, and my 3 other main ones are 34, so that's why it's kind of scrunched up here. But yeah, I've got an 8-grid and then a 4-grid. I just keep them together there. So yeah, it works on the SPYs, works on Qs, all that, same product. So NADEX is actually not available in Canada. That is the only thing. No, he is not. Charting platform for the indicator is Thinkorswim. Can you do this in a Roth? No, you got to do it through NADEX. But the strategies and stuff, if you're trading traditional, either options or futures or whatever, you can do those in your Roth as long as you're allowed. Yes, it is available in the UK. Yeah. Can I use it for analyzing both Forex and crypto trades? Yeah. The strategies that I use, there was actually some examples of some currency trades in August and September. And I actually did one just the other day on Aussie USD, I believe it was, in the room as well. So yeah. Yeah, absolutely. How much to open an account in NADEX? Minimum is $250. Again, that low collateral required. Yeah, absolutely. It is available in Australia as well. Yeah, so I mean the main place it's not available is going to be Canada, unfortunately. There's just some regulatory things. The average win rate with the divergence trade. I don't actually have an average win rate with the divergence trade. I haven't tracked that in a number of years, but I wouldn't still use it if it didn't work. I used it the other day, actually, last week in the NASDAQ. I'm on my office computer instead of at the house, so I don't have my screenshots. But that trade was good on 2 contracts in the NASDAQ. I traded it with futures, was good for like $4,500. I'm not sure if Uganda is available or not. I would have to double check on that. Divergence indicator works on NinjaTrader 8. No, it only works on Thinkorswim. Literally copy and paste, Edwin. If you can copy and paste, you're good to go. I see Jeanette coming on. She's about to tell me. She's smiling. That's a good thing.
I'm smiling because you did great, but it's time. TikTok.
The time has come. All right. Well, thank you guys so much. And again, thanks Jeanette and Raleigh and everybody else on the team that put it together. It takes a lot of work behind the scenes. And thank you guys again for coming on and spending an hour with me. And I look forward to working with the rest of you guys that joined inside the Discord and inside the course as well. So thank you guys and enjoy your Wednesday.
Thank you, Eric.
Thank you, Eric.